Welcome to the Beef on Dairy Dialogue webinar series, an extension of the annual Dairy Beef Short Course. It's held in conjunction every year with at the Central Plains Dairy Expo each March. The short course is the longest running program focusing on steers with dairy genetics in the U.S. with 15 years of continuous programming and is sponsored by the I-29 Moo University, a consortium of extension specialists from Iowa State University, University of Minnesota, University of Nebraska at Lincoln, and South Dakota State University. The I-29 Moo University Beef on Dairy Dialogue Series continues today with Derrell Peel from Oklahoma State University discussing the current cattle market with a special focus on the beef on dairy aspect of the market. Derrell is the Charles Breedlove Professor of Agribusiness in the Department of Agricultural Economics and has served as the Extension Livestock Marketing Specialist since he came to Oklahoma State University in 1989. He has a BS and MS degrees from Montana State University and a Ph.D. from the University of Illinois. He previously served as the superintendent of the Southeastern Colorado Range Research Station in Springfield, Colorado. His main program areas at Oklahoma State University include livestock market outlook and the marketing and risk management education for livestock producers. Derrell also works in the area of international livestock and meat trade with particular focus on Mexico and Canada and the North American livestock and meat industry. As I always say, Dr. Peel, the podium is yours.
All righty. Well, good afternoon, everyone. And thank you, Fred. Appreciate the opportunity and the chance to visit with you. And talk a little bit about this cattle market. Of course, this is the kind of thing that I often do and have done for many, many years. But one of the things, of course, that's changed in the last few years is the fact that from a dairy industry perspective, these beef markets become much more important and certainly something to pay more attention to. So we're certainly seeing that and continuing to look at that. So I'm going to run through basically the beef market situation, broadly speaking. I do have a couple of dairy specific comments in here. But for the most part, the beef on dairy calves are included in this outlook and always have been by and large, whether it was straight bred dairy animals or crossbred dairy animals. But I'm going to begin with the thing that's been occupying a fair amount of my time and other folks' time, even though it's not an issue broadly speaking in the cattle markets, but it's certainly captured some attention, and that's the New World screwworm. So as you undoubtedly know at this point, starting June 3rd, June 3rd of this year, we found the first case in the U.S. We've been anticipating for quite a few months now that it would get here as it has spread widely across Mexico once again. This is a pest that was eradicated from the U.S. and Mexico a long time ago, but never truly eradicated. We simply pushed it down to Panama, kept it at bay, but it's gotten around the barrier in the last 3 or 4 years and made its way back up here. So we're dealing with it once again. As of yesterday, USDA has recorded 39 cases in the U.S. Some of those are now over a month old, and so they're inactive. There's 18 active cases. The counties in Texas here that are highlighted with the yellow stars are the ones where we still have active cases. The blue stars are cases or counties where a case has been found, at least. And there was one case in southeastern New Mexico. At the very beginning, there was a dog found there. That was kind of a dead end thing, so it hasn't been an issue at all. But I didn't show that on the map here. So that's kind of where we are with that. It's not a market issue, and that's the important I think for livestock producers outside of this area. Obviously, the folks in this region are very vigilant, watching for it, and dealing with it and dealing with the implications of it. Outside of that region, it's not really a market issue. It's not impacting markets. We don't expect it to impact markets from a supply fundamental standpoint. It has no impact on meat or food safety or anything, so it's not a consumer issue. And so we've not seen any real market impacts from that, and I don't expect that to change. But that said, we are still dealing with the outbreak, and it's somewhat uncertain at this point how long that'll last. Sterile flies are used to control these things. There is a new facility. It's a refurbished facility in southern Mexico being brought online right now as we speak in the month of July that will add additional sterile fly capacity to USDA's arsenal. And that will help. And of course, we are building a new facility in the U.S. So it'll be another 15 or 18 months before that facility is online. We may be dealing with New World screwworm in the U.S. For the next several years. It would not be surprising. It may take us that long to get control of it once again and continue to work with Mexico and the Central American countries to try to get this thing back under control. So I just wanted to provide that update. Again, it's not really a market issue, but it is certainly something that's been a topic of discussion in many cases. So a quick survey of cattle markets. This shows you, now these are Southern Plains-based prices. So depending on where you are, the price levels might be a little different, but in general, 2026 has continued the pattern that's been in place. I'll show you a more historical time frame here to put this in context, but the bottom line is prices continue to be very strong and are generally still increasing in the U.S. Now, this particular month, if you've noticed the last couple of weeks, we're in a bit of a correction right now. It's summertime, and that's what it is. It's a correction. I'll go through the numbers here, and I'm going to argue that we're not done with this market and this long-term bull market that we've been in. But anyway, calf prices so far this year, feeder cattle look much the same. We've continued to move higher in general and be at a higher level. Fed cattle, same story. We've set new record prices in all of these markets. At some point in the last 6 months, depending on the time of year, we're off of that just a little bit right now, but mostly that's because it's July and it's the summer doldrums. Markets typically slump a little bit in the middle of the year, and it doesn't change the overall direction of these markets. So if you put these together, this chart really provides good context. The blue line is a calf price, the green line is a feeder cattle price, and the red line is that fed cattle market price. And so you can see what we've done. Again, we've had this tremendous run up on the right-hand side since late 2022. A couple things are important about that. And, again, what's on people's mind in many cases is we did something like this back here in about 12 years ago. We were in a somewhat similar situation from the standpoint of the cattle cycle, which is driven mostly by the beef side, and also by drought conditions that precipitated what were then record high prices. And here we are again for much the same reasons. And we'll get into the numbers here in just a second. But, one of the things I would point out about this chart, obviously cattle prices do generally move together. They're going to, broadly speaking, go up and down together. They are all related, but they're related on very different time frames. There's a lot of short-term dynamics in the relationship between prices across here. And one of the things you see is when these prices go up, the calf prices go up farther and faster than the feeder cattle prices, and the feeder cattle prices go up farther and faster than the fed cattle prices. And that really highlights the fact that everybody above the cow-calf level in this industry is a margin operator. Cow-calf producers turn grass into beef in a very fundamental production way, in a very primary production way. And then everybody else takes those calves as they work through the supply chain and through the system. And it's all based on some sort of a margin. There's always a buy-sell relationship that's the primary driver of economics, whether it's at the stocker level, which would be between buying calves and selling feeder cattle, or the feedlot level of buying feeder cattle and selling fed cattle. It goes through the packer level as well, fed cattle to box beef, all the way to the final consumer. Everybody's in a margin situation. And what this illustrates is when these lines get farther apart, margins are challenged, because it means that the input side of the buy-sell relationship is increasing faster than the output side. And that's generally the thing we see in the industry right now. Now, not everybody is experiencing the same kind of margin pressure, but there is generally margin pressure for everybody above the cow-calf level. And that becomes important. Obviously, the thing we know the most over the last 2 years has been the fact that the packing industry in the U.S., the beef packing industry, has struggled the most with these poor margins and the challenges that go with it, the losses that go with it. They've had tremendous losses as a result of that. So we'll talk about the feedlot situation a little bit here in a minute. Obviously, the packing situation is there. We've seen some adjustments in infrastructure. And, you know, there's even considerations here going all the way through to the retail and final consumer level. Cull cow prices, just a quick, and part of that survey, continue to move higher. I've charted several years' prices. These are Southern Plains basis, and beef cows. But again, these markets move higher. In fact, we've seen relatively bigger increase in these cull cow prices and the beef that comes from those compared to anything else. Quick review of last January's inventory numbers. We're going to get some mid-year numbers next week. A week from tomorrow, we'll get a mid-year update. Where we were on January 1, the U.S. continues to get smaller in terms of cattle numbers. Beef cow herd was down 1%. Dairy cow numbers were up. I'll show you a couple charts here in just a second. Beef replacements were up slightly for the first time in about 8 years. Dairy cow replacements were essentially unchanged. The feedlot inventory is a little smaller, although that has not adjusted as much as we might expect. And the calf crop in 2025 was smaller. So the beef cow herd in January of 2026 was the smallest since 1961. And that fundamentally is the main driver of the inventory and the supply fundamentals here. If we look at the dairy cow side, we actually saw an increase in dairy cow numbers from 2025 to 2026. It's the smallest in this chart, which goes back about 25 years. I forget the exact year. I think it was the largest dairy cow inventory since sometime in the early 90s, I believe, 93 or 94, something like that. So a few more dairy cows. And I will say this before I move on, we'll come back to some of the beef cow side because that's going to be the driver of the cattle cycle and where we go. But relative to the dairy component of this, this puts it in perspective. So again, when we think about dairy cow numbers and being up, you can't even see it on this chart with the scale that's needed here to graph beef and dairy cow inventories together. So it's important to keep those in mind in terms of the relative contributions here or the relative size of these sectors in terms of the animal numbers and what that means in terms of beef production and so on and so forth. The dairy culling percentage has been lower the last couple of years. The dairy industry was able to increase the dairy cow herd largely by reducing culling rates and hanging on to cows longer. And also at the same time, fewer dairy heifers relative to the last few years entered the herd. And I think both of those really illustrate the fact that this beef market impact on the dairy sector is quite huge. Frankly, there are folks in the beef side that are very, concerned maybe is the best word, very cognizant of the impact and the role that these crossbred calves play on the beef side. But the fact of the matter is, it's just a matter of what those animals are genetically, more so than a change in the numbers. But from a dairy perspective, I do think the beef market impact has significantly impacted dairy herd management, at least in the short run. And that probably means that there's some additional adjustments as we go forward. I don't think these cows can continue to get older. And it appears very much that the dairy cow herd has gotten a little bit older over the last couple of years. Dairy and beef together make up the total calf crop. And so the 2025 beef or the 2025 U.S. calf crop was the smallest since 1941. So even with the slight increase, that was coming into this year. So last year, the dairy cow herd plus the beef cow herd, a very small calf crop. And that's fundamentally where we are. And again, you can sort of see the cattle cycle here. Maybe what's more important than that long-term number is the fact that the U.S. beef calf crop has gone down since 2018. It's gone down for 8 consecutive years. So we've continued to see the primary production or the fundamental supply of the industry tighten up, and again, all those sectors above that are working their way through that and dealing with the implications of a ever tightening feeder cattle supply. I won't talk about this much, but drought is what got us here. From the standpoint of the beef cow herd liquidation that happened from 2019 to where we are now. We may be at a low, but we're not sure yet. But it was drought from 2020, but especially 2021, up until at least earlier this year. And you can see from this morning's drought map that we still have quite a lot of drought in a number of areas. Now, some areas are pretty clean right now. We've seen some improvement. For example, in Oklahoma, half of the state now has largely eliminated drought, but the western part and much of the west still has a lot of drought issues, and there's some pockets in the eastern seaboard and down to Florida that have significant drought. And all of these are pretty important cattle production areas, specifically beef cow production. Just a quick comment on feedstuffs. The bottom line is, if you go back to this map, we don't have drought issues for the most part in the major corn production areas of the country. So we're anticipating a very large corn crop again, probably another record, very likely anyway. And so, corn markets have been basically at this current level for the last, this is the third year, I should say, 2.5 years. We've been down here. Now, if you look at the implications of this from a cattle feeding standpoint, which is the biggest impact of corn in beef markets, compared to 2023, corn prices were very high, and then we got into big corn crops in 23, 24, 25, and now it looks like 26. And so we've seen cost of gain. This is Kansas feedlot data. Started working its way lower from a peak in the first half of 2023, and it continued declining. And then through all of 2025 and so far in 2026, we've been at these, much lower cost of gain levels. We don't expect that to change significantly, given what we just said about the corn crop. It's not quite made yet, but it's well on its way. It's going to be pretty hard to see that corn crop change very much, I think, from this point. So we expect to continue to see favorable feed costs. That has helped the feedlot sector a lot relative to that margin discussion that I mentioned a few minutes ago. If you look at the buy-sell margin of feeder cattle versus fed cattle, so that's basic feeder buy-sell, the feedlot buy-sell margin, it's wide. It's historically wide. It would suggest, again, an adverse margin situation. But over the last 3 years, 2 to 3 years, feedlots have actually continued to be relatively profitable most of the time. In fact, quite profitable most of the time. Part of it is due to those improving feed costs. And part of it is just the fact that in a feedlot, you're going to feed those animals, depending on how big they are coming in, but you're going to feed them anywhere, on average, they're going to feed 180 to 190 days or maybe a bit more. And so the time lag between when they are placed and when they are marketed allows for this increasing market to offset part of the buy-sell margin that looks pretty adverse at a point in time. And that's what this graph is measuring. But I will say, going forward, the tighter feeder cattle supplies is beginning to weigh on feedlots. They're having a hard time maintaining inventory. The buy-sell margin is kind of catching up with them because markets are still improving, but not as fast as they were. And so feedlots are probably going to see more margin challenges as we go forward. Now, honestly, they've held up better than I expected over the last 2 years. But I still think eventually these smaller inventories of cattle combined with, the market kind of, it's not done going up yet, but it may be slowing down a little bit. And that's going to make it more difficult for feedlots going forward. Feedlots are looking at break evens in the second half of the year. On average, and it depends on where you are in the country and so on, but on average, we're probably looking at on a live basis for $250 a head or a hundredweight feedlot break-even costs. And we've been that high earlier in the spring at record levels. We're certainly not that high right now. And again, we may get there, but we may not, or it may be a bit more of a challenge going forward for feedlots with break-evens plus or minus that kind of a level to continue to enjoy the profitability that they have up to this point. Feedlot inventories have actually increased in the U.S. the last 2 months after about 18 months of going down. However, this doesn't indicate that we have more cattle on. There's more cattle in feedlots, but that's simply because we've slowed down the rate at which cattle are moving through the feedlot. If you look at, you can see here that over time, we've only come down slightly from the peaks. Again, the peak calf crop was back here in 2018, and yet we've not seen very much decrease in the overall feedlot inventory over that time. Compare that to 10 or 12 years ago, we saw a fairly sharp drop in feedlot inventories. We have not seen that this time. Feedlots obviously have an incentive to stay as full as they can. They're in the feeding business, and so they try to maintain inventories. They try to keep that feed mill running. That's the basis for their profitability, and so they try to do that, and they've been successful up to this point. That may be harder going forward for them to do that. If you look at the orange line here is the actual average rate of feedlot placements. So now instead of looking at the monthly inventory, look at the rate at which cattle are flowing through feedlots. And the placement rate is going down. The red line is feedlot marketings, which is also declining. Both of those are consistent with the idea that we have less cattle in the country. There's simply not the cattle out there. So feedlot production is declining. It's just a question of sort of how long they stay in the feedlot. And so, again, we're still kind of coming to a head, and we're not there yet in terms of the squeeze on feedlot production. In fact, at this point in time, we're still probably 18 to 24 months away from the end of this squeeze in feedlot inventories at the earliest. I'll get back to that at the end when we sort of talk about where we go from here. One of the reasons they've been able to do that is by increasing days on feed. So there's less cattle coming into the feedlots, but they're hanging on to them longer. That allows them to keep the feedlot as full as possible for a longer period of time. Of course, when they do that, we've also continued to feed heifers. So that's the other thing that hasn't changed yet is we're not saving enough heifers to do any herd rebuilding yet. So those cattle are still showing up in the feedlot. At some point in time, this part of the industry will drop as well. We got to hold some heifers for rebuilding, and so that'll also squeeze the feedlot situation. So less cattle are coming through the feedlots. Feedlot production is down. In other words, that means cattle slaughter will come down. It did last year. Cattle slaughter in total was down 6%, 6.4%. Steer and heifer slaughter was down 5.5%, and cow slaughter was down 10.5% last year. So far this year, basically half of the year in place now, fed cattle slaughter is down over 8%, almost 9%. Cow slaughter is down still another 5%. So total cattle slaughter is down 7.9%. That suggests obviously declining beef production, but we're partially offsetting decreased cattle slaughter with, I forgot about these charts. These are just showing the decrease in slaughter. But we're partially offsetting that with the fact that cattle are bigger. We're keeping them in the feedlot longer. They continue to get bigger. They've jumped sharply in the last 2 years. This is the third year, actually. They jumped in 2024, again in 2025, and they're up sharply this year. And so, we're partially offsetting decreased cattle slaughter with larger or heavier pounds per carcass per head, but it doesn't fully offset. We've added about 60 to 70 pounds to steer carcass weights in the last 3 years up to this point this year, which is a dramatic increase in those carcass weights up to this point. And, there's been a long-term trend of carcasses getting bigger, but not at that kind of a rate. That's way more rapid increase in carcass weights than we've seen before. So here you can see the chart here. They have, on average, steer carcass weights have accelerated the last 2 years, and that's consistent with those increased days on feed, largely driving that at the feedlot level. When those cattle get big, they get fatter. Not all of that increased weight is meat. Some of it is, but the percentage of cattle grading yield grade 4 and 5 is at a record level right now. So these cattle have a lot of fat on them. The market is still allowing that to happen because there hasn't been a lot of pushback for heavyweight carcasses or for the level of fat on these carcasses up to this point. At some point in time, that may change, but probably not in the immediate future. We also get some benefits in terms of quality grade when you feed cattle longer. In particular, we've continued to see the choice percentage go ahead and accelerate. When you add that on to the prime percentage, excuse me. Prime percentage continues to grow. Choice percentage has been relatively flat at this point, but the combined two, we're now getting 88, we're approaching 90% of all the cattle coming out of feedlots are grading choice and better, choice and prime. And then that means that we're down to 12% or less of cattle that are grading select. And that's a pretty dramatic change over the last 10 to 15 years compared to where we were, 15 years ago. We've improved the quality of beef a lot, and the consistency of that product has been improved. That's a key to the beef demand that we continue to see. We'll talk about in just a minute for a bit. So beef production was down in 2025, about 3.6%. We think it'll be down 4.5% to 5% probably for 2026. And I'll show you a chart here. I think it's right here. We've got beef production declining in 2026 and again in 2027 at least. And it might even decline past that. It kind of depends on what happens here in the next 12 or 15 months probably, whether we can stop that decline at this point in time. Again, we're still trying to figure out whether we're coming close to stabilizing the total cattle numbers, and particularly the beef cow herd in the U.S. At the same time, we've continued to enjoy extremely strong beef demand. So box beef, the wholesale values for beef have been very strong. We're right now at about last year's level. And of course, this last week, if you follow this, we've seen a pretty dramatic drop here in the short term after the 4th of July. I think that's just a summertime, kind of a summer doldrums thing. We usually see beef demands seasonally drop back a little bit in the heat of the summer. But I don't think it's a fundamental change at this point in beef demand. We've been watching for signs of sort of noticeable pushback, if you will, to these record high retail prices continue. The latest data for June shows a continuation of record high retail beef prices. You can see how it's advanced over the last number of years. And probably more important from the standpoint of beef demand is that beef continues to be very high relative to competing meats. There's plenty of other proteins out there in terms of pork and poultry production, and yet from a price standpoint, we don't see a lot of competitiveness of those other meats relative to beef. It continues to be very strong. We've extended those ratios of retail beef to chicken price on the blue line and to beef to pork on the red line. Again, relative to those meats and the fact that the supply of both of those meats is plenty adequate, there's lots of alternatives for consumers, but we're not seeing a lot of impact there. This is the pattern of beef exports in recent years. We peaked in 2022, which was also the year that we had record U.S. beef production. And since then, as we expected to see beef exports decline, production has gone down. Prices are at record levels. So all of those would suggest we're going to see less exports, and we are seeing that. For the most part, really as expected. In fact, arguably, beef exports have held up maybe even better than expected, given the price pressure that we're seeing and the supply challenges in this market. The biggest change we've seen in the last year was the China-Hong Kong market. That, of course, is down because we still have a trade war situation with China and tariffs and various political implications or political factors that are limiting that trade. So that's been one of the bigger impacts in the last 12 to 15 months or so. We all are also importing more beef. We always import some beef. A bunch of that import is used to support our ground beef market. And right now, with cow slaughter down as much as it is, there's a tremendous demand for additional lean processing beef in the U.S. And so you can see this is the annual numbers through 2025. So far this year, for the 5 months compared to the same period in recent years, we've continued to see increased beef imports. Brazil and Australia being the largest two sources and the fastest growing of those sources. And so again, it's all as expected, and it is helping us to try to maintain particularly that ground beef market, which is, roughly 47 or 48% of our beef consumption in this country is in the form of ground beef. So maintaining that supply of beef, which has actually decreased more from the standpoint of cow slaughter in recent years, is very important. The imports help supplement that and maintain that market. This is the impact of the New World screwworm. For many years, on average, we import about 1.1 million Mexican feeder animals. I don't have Canada on here. We also import some cattle from Canada, both fed cattle and feeder cattle. But this is the one that's changed. Of course, we closed the border mostly in 2025. We did get a couple 100,000 head through in the first part of 2025. The border's been fully closed since July of last year and continues closed at this point. And so at this point, even though the New World screwworm now has got here from the U.S. Or into the U.S., we have not changed that situation. It's a political decision about opening the border. There's certainly some push from various places to reopen the border, but it hasn't happened at this point. No idea really when that might happen. Okay, I'm going to try to wrap up here in the next few minutes, talking about sort of where we go from here. And then I hope you have questions and comments for me to go from there and take some additional discussion. So this is the cattle cycle again. Again, beef cow herd is the major fundamental source of the cattle cycle, and the industry has been cyclical for 140 years. So it naturally has cycles. Some cycles, including the current one on the right-hand side, again, we may be at a low now. We don't know that yet. We have to wait and see. Next week's July inventory data may give us a hint as to whether or not we've stabilized the herd relative to the long-term trend. But the industry's been cyclical, but it's also then subject to things that either exaggerate or offset the cycle. And the last two cyclical lows, the current one as well as in 2014, those were exaggerated by drought. So in both cases, we never intended to be this small. The drought forced us to liquidate cattle. In fact, we would have probably seen relatively little liquidation over the last 4 years or 5 years without the impact of the drought that forced us down to this level. So here we are with the smallest beef cow herd in 75 years about. And so, where do we go from here? If we're at a low, the way you get to a low and stabilize is by stopping the herd liquidation. So cow culling in the U.S., that's this red line, has been declining the last 3 or 4 years. We've dropped beef cow slaughter specifically to try to slow down that rate of culling and stabilize the herd. And we're doing that. We're coming in with perhaps a historically low culling rate for 2026. The pace we're on right now through the first half of the year would suggest we might see a historically low beef cow culling rate. So that helps slow down the rate of liquidation, but then herd growth or rebuilding, if you will, in terms of a herd expansion after that requires heifer retention. And so you can see 10 years ago, cow culling dropped to a low and heifer retention went to a record high. That's how we were able to regrow the herd from 2014 to 2019. So far, we've seen just a very minimal level of heifer retention in the U.S. And in fact, there's very little indication thus far in 2026 as we go through the year here that we're seeing much heifer retention. We've still got some drought issues, and for a variety of reasons, we're just not seeing a lot of retention. So prospects for herd growth, going into 2027 are minimal. Here's another way to look at it. Typically, the measure of herd expansion is when female slaughter, this is cow plus heifer, drops to a low level relative to total cattle slaughter. So this is the last 4 cattle cycles, and in every one of them, this percentage was a good indicator of when we were in expansion mode. Excuse me. And you can see where we are now. We're kind of headed that way, but we're not down to a level yet. Typically, this black line at 47% would be a key threshold to indicate herd expansion. At least historically, it has been. We're not at that level yet. This would suggest that it would take another 6 to 9 months at a minimum to get to that level, and then we have to go below that for some period of time to have any sustained level of herd expansion. All of that to say that it certainly won't happen in 2026. Not much, if any, will happen in 2027. And unless we start to see more significant indications of heifer retention, I would not expect to see much herd growth. At this point, we're basically looking at the end of the decade. We've continued to pull down heifer inventories. That's kind of what this circle indicates. Compared to the last cattle cycle, we actually started increasing heifer supplies or heifer inventories, if you will, prior to the beginning of herd expansion. We have not done that this time. We had just a tiny increase this most recent January, but not enough to suggest anything very dramatic yet. So all of that is ahead of us. The cattle inventory will maybe stabilize here, but again, very little prospects for growth from the standpoint of the female component of this market. So we have to rebuild these female numbers. We've got continuing drought issues and drought threats that is causing producers, understandably, to be quite cautious in many cases. And then there's a host of other things that have been different this time compared to history. The financial situation is quite different. Obviously, we're in a very different world in terms of interest rates and so on. We're in a world right now where there's so much additional uncertainty and volatility in markets that alone, I think, is a source of caution for producers. And then, we continue to see demographic adjustments in the industry as producers transition out. And, some see this as current market as an opportunity maybe to make that transition if they've been thinking about it or approaching that decision at some point. So all of those are things that contribute to slowing down the process of turning the corner on this cattle cycle and maybe pushing things and back up a little bit in terms of some herd rebuilding. Now, the primary signal historically for herd expansion was positive cow-calf returns. Typically in a low, you will see positive cow-calf returns. This is beef cattle, of course. That will trigger heifer retention and herd expansion. We're obviously in a very, very strong return situation. We've had, this is the third year of pretty good returns, very good returns in 2025, 26, and we're projecting them to continue through 2027 at a minimum. At this point. And that doesn't necessarily mean that they're over at that point. In fact, I think it probably doesn't, but we're not really putting our expectations, our forecast out there any farther than that. But the market is providing incentives to stop the liquidation first and then turn that around into some sort of herd expansion. We're just not seeing it happen. Because of that, and because the process of herd expansion means that we have to retain heifers So we already have extremely tight feeder cattle supplies. That's what's driving the current record level of prices generally in the industry, combined with good demand, of course, on the beef side of things. But in order to see any herd rebuilding, we have to retain heifers, which means we have to make a tight supply even tighter. And we're really not seeing that yet. We're not into that yet. So for those reasons, we're expecting continued high prices and increasing prices, perhaps at a slightly slower rate in 2026 and 2027 at a minimum at this point. It's beginning to look to me like the slow pace here probably means that we will stay at a very strong, elevated plateau of cattle prices through the end of the decade at this point. Somewhere along there, we may peak, but it doesn't look like there's any real prospects of this thing sort of crashing on the backside. One of the concerns that especially beef cattle producers have had all along is the fact that we peaked, and the peak was fairly short-lived about it in the last cattle cycle a decade ago or 14 or 12 years ago. This one is set up very different. We do not have the prospects for a sort of a spike top and a hard backside to this thing. It looks like at this point we will be in fundamentally tight supplies for, again, basically for the rest of the decade. Now, it's all contingent on demand, and I have to say that because we continue to watch demand. If something were to happen to change consumer demand, preferences look extremely strong. I think consumers still want to eat beef, but if there were enough bad macroeconomic news or something were to happen, high gas prices for an extended period of time, for example, would be the kind of thing that could eventually have some impact on demand. And that would, make it much more difficult to see any additional increase, regardless of the supply squeeze that's going on in the beef industry. And so that could change the path a little bit. Probably doesn't imply that we would see lower prices or dramatically lower prices, but we could flatten out a little bit quicker if demand were to soften a little bit going forward. I don't see it yet. It's just not there. We've been watching markets demand closely for the last 2 to 3 years, and we just continue to see very robust demand. So all in all, I think we've got very strong cattle prices. Obviously, now you take that back to your crossbred calves. They're at extremely high levels as neonatal calves, or coming out of a calf ranch someplace going into the feedlots. These calves are obviously at extremely strong prices. This suggests that that's going to continue at this point in time, and the market is again providing incentives for the supply of those calves to continue and even grow as we go forward. Not necessarily on the crossbred side, but in total, the market is trying to encourage some expansion in cattle inventories. With that, I guess we had a summary slide here I forgot about. We've said all this. And so, herd rebuilding if it started, is very slow. Margins are variable. Cow-calf producers are in the driver's seat and enjoying strong returns and will continue to. Feedlots and stocker producers, as well as packers, and even retailers at some point will likely see more margin challenges going forward. From the standpoint of the packing industry, we've already seen a couple of plants taken out. We still have excess capacity relative to current production. And it's entirely possible that we could see some additional adjustments there as we go forward. And so that could have long-term implications for the industry. Someday we may really miss that capacity, but that's probably a few years down the road. And so we'll continue to see those challenges. And again, volatility is a big issue in this industry. I think it's affecting producers in many cases and their ability to, even when prices are high on average, there's so much volatility that, much like we're in right now, we see these short-term corrections in the market, and they can be pretty severe, generally not very long-lived. but pretty severe. And if you happen to be caught in one of those when you are, in the process of making marketing decisions for cattle, these corrections can be a very big deal. So the risk is still pretty high, even though we're in a generally bullish market environment. So that said, Fred, I'm going to stop there and see what kinds of questions and comments we might have.
Thank you very much, Dr. Peel. Folks, we've got kind of a small group. If you want to go ahead and unmic and just ask you a question directly. I'll start off. We did have a question from Larry. I'm going to have him read that question and kind of share the nuances of what he was asking here.
Well, yeah, I got a better one for I'd like to ask first. So, Dr. Peel, so the dairy industry, when you talk about these dairy cows and how you can spend that much for a heifer, a lot of times with these current prices, it's 2 to 3 years before they get the payback. So if you extrapolate that onto, if I buy a beef heifer for like over $4,000, how many years is it going to take me with these current prices and assuming that these prices hold to actually pay for the investment in the heifer? Is that 2 calves, 3 calves?
If you look at today's prices, we're talking 2 calves or maybe a little bit less. And historically, that's not out of line relative to what we typically see in a cattle cycle. So I hate to say this, but I'm going to say it, and it's true. I think both on the beef and on the dairy side, I don't think these females are overpriced. I think they're probably still a little bit underpriced relative to the situation we're in. That might not make me friends in some places, but.
So when you take a look, it's kind of like the limbo stick. How low can you go? So both the beef and the dairy herds, how low can those herds actually go before we need to do something else drastic, either import more beef or do something else or look at some alternative meats to fill it?
Yeah, that's a great question. And, for that, you start looking at sort of very fundamental, sort of economic drivers, I guess. I have always argued, and I think it very much applies in this respect, on the beef side, the one thing that to me guarantees we're probably going to have a beef cattle industry in this country is the fact that cows eat grass and pigs and chickens don't do well on it. And so as long as we've got the forage resource, we got a big country. And, people talk about we're losing land to development or to non-ag uses. And that's certainly an issue in some regions. But taken collectively, we got a big country and we got a lot of resources and a lot of potential for production. And there's just not a better use for it. So we're going to, there may be a lot of economic adjustments, but we're going to have a cattle industry. And so I think, that'll be there. Obviously, the dairy industry historically was driven almost exclusively by dairy market economics and still is at the end of the day, I think. But in the short run here, this beef market is having a significant impact on sort of moderating the way we're managing things, at least at this point in time. So, that's a somewhat different issue relative to the dairy market. But on the beef side, I think we'll have a beef industry. Now they're a somewhat related question that you didn't ask, but I get asked a lot is we're talking about rebuilding the herd. And so the question is, how much are we going to rebuild? We know we get more pounds of beef per animal than we ever have before. We've pushed that perhaps to about a limit, but nevertheless, it's a very, very strong increase in productivity. So how many cows do we need? And my answer to that is that I think it depends on a lot of things, really mostly things that are outside the country. I think the global market potential for beef is still, kind of a wide open question at this point. So I think there is potential for this herd to rebuild some from current levels, but is there a market limit to how big we need to be? I think that kind of depends on how we decide we want to participate or are able to participate in global markets. That went well beyond your question. Sorry about that.
No, but I appreciate it. Very, very good job answering it. I'm going to buy some heifers.
If there are any questions out there, just go ahead and open up your mic and ask them. I'm not seeing any movement. I've got a question that's been of a concern for me since we've seen the border close. we're assuming Mexico is feeding those feeders that aren't coming north. So as they are feeding more cattle and developing infrastructure to process them and utilize them in their country, down the road, will they not be buying as much beef from the USA? And how will that affect our market?
Yeah, there's several things wrapped up in that, and it's a very important point because Mexico has more infrastructure than many people might realize. They've developed a lot of processing and cattle feeding infrastructure over the last 20 plus years. I lived in Mexico 25 years ago, and it was kind of just starting then, but you could see it coming even then. And in fact, so they can't export that million head of cattle that they historically have. They are keeping those cattle. They are utilizing them in Mexico, and they have the ability to do that. It obviously the short run shock of closing the border and changing all of these flows caused some buildup or backlog of cattle, but that's a temporary thing. They do have the ability to utilize these cattle, and they are utilizing. We've been closed long enough now, and the way that industry has developed over the last 20 years is they were really backfilling their domestic market has continued to grow. I guess I should say that it's grown, significantly over time, and they were backfilling their domestic market with cattle from farther south. That's why we have a screwworm problem. Is cattle were flowing into Mexico from the south. And now with the border closed, they've got a million extra head that they were exporting that they're not exporting now. They can utilize those cattle. More than likely, the offset to that is they simply aren't, there's not as much demand for them to pull in cattle from the south. And I say all that to say that, if this thing stays closed long enough and supply chains readjust and infrastructure, they will be building some additional infrastructure. But I don't think they need to build as much new infrastructure as some people think, because they have a lot of infrastructure. And one of the newest, broadly speaking, one of the newer modern beef processing plants in North America is in northern Mexico. It came online about 10 years ago, and it sits right next door to a 300,000 head feedlot. So they have infrastructure, and that's not the only one, but that's probably the best example. So they can do that. So if to your point, then if there's a chance that someday the border opens and they don't care. Now, right now they do care because there's a huge economic discount on their cattle because they're still dealing with the initial backlog, if you will, or the process rebalance those cattle. But over time, if those prices rebalance across the border, there's a potential that the border opens and they just simply don't need to send as many cattle north as they have historically because they're utilizing them and have developed the supply chains to utilize them in Mexico. When that happens, they produce more beef. They don't necessarily need to import as much beef, although I think the imports and the exports of U.S. beef to Mexico probably is more driven by product specific nature. In other words, it's more product specific, not so much just a basic quantity issue. Now, it wasn't always, but it is now. So we will probably continue to export some to Mexico. That's not to say there won't be some adjustments. The other thing is that they process more beef in Mexico. They can export more beef. They're the number 11 beef exporting country in the world now. And for the first 5 months of this year, we are importing more beef from Mexico. The increase in that 5-month period from Mexico is slightly bigger than from any of the other sources that we get beef from. So your point is extremely well taken that all of these markets are integrated and interrelated. And it's not just whether the border opens or not, it has implications for the whole package of both cattle and beef bilateral trade between the countries.
Thank you very much.
That was a long answer. Sorry about that.
Great answer. A lot of information tied up in there. I'm going to go back to your point on imports and how important consumption is to keeping our market flowing. How do imports affect future consumption in the United States? Are we going to see the consumer show some resistance to imported beef as opposed to what we're seeing now?
And this kind of relates to the earlier question about, whether we just import beef to, instead of trying to produce more here in the U.S. It's a little bit related to that as well. So, I'd say two things. One is beef is lots of different stuff. So when we talk about beef, we talk about beef demand in the aggregate, but beef is thousands and thousands of different products, and each one of those is quite specific. So it's really not possible realistically to make that kind of aggregation. And I do it too. It's not that it's a bad thing, but you have to recognize that beef is very specific. So when you think about our typical steaks, the middle meats, the high valued cuts in the U.S., there's not a lot of places in the world we can go get that from anywhere else. Canada produces beef that's very similar to ours. But beyond that, and there's some other countries that are starting to do some cattle feeding, but they don't necessarily feed them the same way we do. So there's not realistically a lot of places we could go to get the bulk of what we think of as, the high valued beef cuts in the U.S. We import stuff that we use for ground beef. We use some of that for some of the processed food products. So some of the imported beef we're getting right now, for example, as supplies are tight, we're using some imported beef in some cases that's going into some of these jerky or sausage products, maybe a little bit more than it normally does, simply because supplies are tight. And because of that, to get to your question, Fred, I don't think the general public sort of sees that or reacts to that. Now, if we started trying to put, ribeye steaks in grocery stores from wherever on a regular basis or on a more widespread basis, there could very well be some reaction, but I don't think that's likely to happen anyway. Most of the imported beef is utilized in food service, first of all, so it doesn't show up in grocery stores in most cases. There's a few where it does, but for the most part, most of it's in food service, and much of it is in, like I said, these either processed or in supply chains where it's not as obvious. And we've done this for a long time, so it's not anything new. We're just doing it to a little bit bigger extent right now than we always have. So the short answer is I don't think it's likely to have the kind of impact that you're talking about. It's a very good question and one we certainly want to be aware of. But I don't think it's going to be that much different than kind of what we've always done.
Thank you.
Most
Joe,
of that, I was going to say that most of that imported beef, and we talk about it supporting ground beef production, but that's not in grocery stores for the most part. Almost never does that show up in grocery stores. That stuff is what's going through food service. So it's basically, it's basically fast food markets.
It's there, but it's kind of invisible. It doesn't have the label.
We don't worry too much about those sources.
Yep. Joe asked the question, could you speak on the challenges young and new producers face getting started to grow cow numbers?
Boy, that's a big question. Obviously, it's always been hard to get started in this business. And there's a whole long list of things. That's a whole workshop, I suppose, that would involve not only me, but our ag lawyer and transitions and stuff and all of that. I say all that to say, I'm not going to give you a very detailed answer or try to, because it's got a lot of pieces to it. But it is, on the face of it, it's particularly challenging right now if you have to go out and try to borrow money to buy these animals. They are expensive on the one hand. I've argued that they're not necessarily overpriced as far as breeding animals. But in the current market, and I do think it's going to persist long enough that, we haven't really pushed these things as high as I expect them to, for both beef and the dairy question is a great one. And I'm not sure if the question was specific to beef or dairy. It probably doesn't really matter in one sense. On the dairy side, there has been concern expressed about the fact that there's simply not enough heifers and not enough incentive to hang on to a dairy heifer and go through the 18 to 24 months to develop her before, even if you're going to sell her as a replacement heifer, relative to the value of a 2-day-old neonatal calf. And all I can tell you is that that demand for those calves that's coming from the beef side has been so dynamic here recently that I don't think we've seen enough adjustment yet, probably on the dairy heifer market yet. And that's a nice way of saying they're probably got to go higher yet, because sooner or later we do have to save more heifers and do all that. Now, a young guy trying to get into the business, again, there's a huge amount of challenges. But, I guess, what can I say in one sentence that would be helpful here? Yeah, I think we have to, first of all, you can't go buy everything on day one. And I say that because I think U.S. agriculture in many cases has tried to own everything. And that's just not feasible. So land is probably the first place to, try to work with, find some way to utilize leased or rented resources, focus on the variable parts of your market as far as operating and so on. And then, ultimately, most of the equity in agriculture is being held by senior level producers. Some of them want to get out and don't know how to, and some young guys want to get in and don't know how to. Somehow or another, we got to get those guys together and actually working together rather than expecting it to just be a simple market transaction. I don't know if that helps or not, but I think we do face a lot of challenges because we do have a lot of transition just, inevitably in the next decade or so.
Very good. Larry, are you seeing any other questions coming through?
Yeah, no, I don't. So,
okay. I've got one question we'll wind up with then. We've watched these carcasses get bigger across the industry. How are these larger beef on dairy carcasses being affected? They've been a larger animal from the get-go. Are we seeing it affect those prices?
Carcasses across the board are bigger. So the beef, straight beef calves are bigger. The beef on dairy calves, they do start with more frame, so they've got potential to be a little bit bigger. I don't think the beef on dairy stuff has really had a tremendous overall effect on average to this. It's part of that carcass increase. But, again, the same thing is true. Just because these calves are crossbred now, all of the male calves were coming through as fed steers as straight Holstein calves before, and they were big framed and they took a long time to finish, but they got there and they graded very well and had big carcasses. So from that standpoint, I don't think the size is so much of an issue. Now, I think there are some size implications in the market, generally speaking, not specific to the beef on dairy, just because bigger cattle and bigger carcasses means bigger cuts. And we do face some challenges. Cuts, carcasses are pounds, and more pounds, broadly speaking, is better, and that's what's driving the market. But consumers haven't really been asking for bigger steaks for about 25 years. And so the bigger these animals get, inevitably the cuts get bigger. And so we have to do some additional and more creative kinds of fabrication. And we are seeing that in some cases. Now, the other thing I would say specifically about the beef on dairy is that the biggest implication, I think, is not so much in the size or the total pounds impact on the beef industry, beef meat industry. Obviously, the implication there is the crossbred calves have different carcass configuration, different muscle configuration. And so what it's done is it's caused some changes and really opened up more markets for that dairy type beef compared to straight bred dairy beef. Just because muscle configuration, obviously you're not as light muscled now. You've got a little bit heavier muscling in those animals, and so some markets that before were kind of closed to that product, even if it historically the Holstein beef graded a bigger percentage of prime than the beef cattle did. Now we've got beef cattle up there pretty well too, but it's only been in the recent years. So for a lot of years, we had a fair amount of prime Holstein beef, straight Holstein, but there were some markets that just didn't want it because they didn't like the muscle configuration. And so now with the crossbreds, you remove some of that. And so it changes some of the market dynamics of sort of where these products are going to go and who's going to utilize them. And that has implications through some of these various product markets, but probably is not really impacting the overall level of the markets all that much. Once again, a long answer. Sorry.
Okay. Shannon has a comment. Finishing weights on our personal cattle have increased approximately 200 pounds in the last 12 years. The difference we know is playing a role on genetics and nutrition as we have fine-tuned their rations.
Yeah, absolutely. We have cattle now that have the capability to be bigger, and that's all good. That's increased productivity in the industry. In terms of management, well, starting with genetics first and foremost, but then management and some of the technology we have available for feeding these cattle and so on have all contributed to that. And again, by and large, it's been a positive thing. And certainly from a standpoint of pounds or productivity in a general sense, there are some challenges in some markets, again, with specific products. And so that's an issue. Now, the other side of it is how big can they get? Nobody asked that, but I'll answer this anyway, right quick, Fred. For a long time, for 25 years, economically, I thought the market would limit the size of cattle, partly because consumers haven't been asking for bigger steaks. But we found ways to fabricate and utilize those products. And so that's less of a limit. It is an impact in some markets. And there are some I say specialty, but some specific beef programs that actually have, in the past have incentivized more moderate carcass sizes. For example, it's not widespread and it doesn't change the overall industry, but there have been pieces of that. The thing that I think ultimately is going to limit cattle size is coming back basically to animal health and physiology. And so we're starting to see, and again, this is not my science, but I talked to veterinarians and feedlot managers and so on. And so, we've struggled with things like respiratory disease for years and years being a big feedlot challenge. Now, in addition to that, we've got this, late stage heart failure, the congestive heart failure, which is more fundamentally, I think, a function of just sort of maxing out the physiology on these cattle, it looks to me like. And so that may be a limit. I won't say that we can't ever get past it, but I think it might be a bigger hurdle to move past that going forward. Now, there are some meat scientists that think we're going to just keep getting bigger and bigger from a carcass standpoint. And from a purely carcass standpoint, maybe we can. I have some concerns about that, but I think from the live animal standpoint, I think it's going to be a pretty big step to sort of make the next leg up on the fundamental size of these animals.
It hurts.
That's what an economist knows about this, and it's not very much. So,
it hurts when that calf that comes into the feedlot perishes. But it really hurts when you've got 160 days of feed in them and
that's
then
exactly
they
right.
drop. So.
Yeah, that's exactly right. It's that gets your attention really fast. And so, yeah, most of the death loss occurs in the first month historically, but that late stuff is really, really, really challenging and a very big impact very quickly.
Thank you, Derrell, for sharing this information and your insights and strategies concerning the cattle market. I'd like to remind everybody this program has been recorded and will be available on the I-29 Moo University website, and it is located on the Beef on Dairy Dialogue section. Give us 3 to 5 working days and it'll be up. In addition, I will email you when it's available, as well as including the link to the program evaluation. Thank you for your participation, and I look forward to seeing you next month on August 26th, when Dr. Dathan Shemchik from Iowa State University will discuss the effect of growth-enhancing technologies on mineral requirements in beef cattle. Again, thank you, Dr. Peel,
You're
and
very welcome.
I'm closing this program.